And more now on what to expect in this new month and quarter with Strategas head of technical and macro research, Chris Verrone. Good to see you.
Great to be here.
How you feel heading into this last stretch of the year?
Well, I think this dichotomy between what some of the data says, what the bond market looks like, and how stocks react is really the key setup as we move into the final months of the year. Going back to what Mark was saying, I am very much in the same camp that the Fed should cut here. And I think the two-year yield is telling you that the Fed should go here and twice.
The market thinks that it's going to.
Yeah, I mean, you look at the two-year yield, it's still 75 basis points below the Fed funds rate. Who needs the policy rate when you have the market rate? I think the Fed is at risk of getting behind the curve here. And maybe in this spirit of private capital, I would note the publicly traded private capital stocks have not acted well here. The Apollos and the Owls.
Why is that? Is that about concerns?
I think it's one of two things.
In that arena?
Right. It's either the market tipping its hand and exposing where some of the vulnerabilities may lie, or it's the more pragmatic view that if we're going to deregulate money center banks, you'd rather own Bank of America or Citigroup than you would APO. So I think it's a little bit of both right here. What I'm comforted by is public credit has not deteriorated here yet. So if you look at double B spreads or even triple C, go way down the quality ladder. Credit conditions still largely remain pretty good. Discretionary is okay. Banks are still pretty decent. So I don't yet see the setup that would scream big problem.
Do you see it in time is the question, right? Do you always see the setup? Or is it's in front of your face, like right in the windshield before you have a chance to react to it? Like, are the warnings that I raised with Mr. Lasry in private credit, more people are talking about it. Are we paying enough attention to it? Are we too complacent about it?
I'm just very reminded, go back to the real crisis. Go back to 06, 07. Banks peaked in late 05. Home builders peaked in early 06. I mean, this was 2 years early before the real problems exposed themselves. So I think at a minimum, if we look at how the next 6 or 12 months play, if something really sinister is out there, I would at least expect some more durable rotation into the market's more defensive corners. Now, there is a shot of life out of healthcare here over the last couple of days, as we've seen. Note that's not being picked up with Staples. Staples remain very, very poor here. You have not seen that.
Well, I mean,
that defensive.
It feels idiosyncratic rather than defensive. Of course, with the announcements in the Oval yesterday, with Pfizer and then Merck and Moderna are obviously going to move.
Yeah, and I'm comforted that has not extended to any other defensive group. And when you look at healthcare in particular, remember, it's still pretty bifurcated here. Biotech's been improving for months and months. I think that's rates down. I don't think that's anything idiosyncratic. Pharma shot a light the last several days, but still largely in weak trends. Equipment quite poor, services quite poor. So there's a lot of work to do, I think, before healthcare is the leadership. It may be on the come, but it's not the leadership here.
Overall, I hear you saying, like Mark Lasry was, sort of, earnings are good, and we expect them to continue that way. And the Fed is embarking on this easing cycle. You think they're going to cut. The market thinks they're going to cut. It's hard to be negative on that. It's like the David Tepper point. Do I love valuations where they are? No way. But you want me to get in front of that? No way.
Especially in October, November, December. We've done a lot of work on seasonality. As you know, Scott, you don't want to stand in front of a tape that has new highs on its mind this time of year. Actually, the real valuable signal is if the market defies 4Q seasonality. If you have a down market in the fourth quarter, 1Q and first half the following year really tend to struggle. So if you're looking for a signal, it's not what happens in 4Q. It's does the market defy the very traditional seasonality?
Well, I mean, the mega caps are going to have a lot to say about that, right?
Absolutely. And listen here, we're here with NVIDIA at new highs today.
$4.5 trillion in market cap.
But also, the equal weight S&P is right there as well. Now, is that leadership? No. But is it at least still involved? It is. I take some comfort in that. This is not the broadest market I've ever seen. But when you look globally, Japan is still involved. China's involved. Frankly, Europe just broke out after 3 or 4 months of pausing here. Paused all summer. Europe back involved. LATAM still trades pretty good. So when you include
emerging EM doing well.
Exactly. When you include the global picture, I think it's difficult with a straight face to say this is just 10 stocks or 5 stocks driving this.
All right, that's fair. We'll talk to you soon. Thanks.